Hello, my name is Angel Marciu Jr. and I'm honored to be invited by OneCoin to give you this set of lectures on introduction to finance, which is level 1 of One Academy, a set of courses which is going to introduce the audience with the vital parts of modern financial and investment science. First, some words about me. I'm a fourth-generation university professor. I am graduated financial manager. I have graduated my first economical degree in high school at the High School of Economics in Sofia, where I was a merit student, and after that I became a student in finance in the University of National and World Economy, where I finished my bachelor in finance as a merit student, as the top of my class. After that, I finished my master's degree in finance as a merit student again at the Burgas Free University, with my specialty as financial engineering. After that, I started my PhD and my teaching career at the University of National and World Economy at the Department of Management, where I am working as of now. I have already 15 years of teaching experience, and right now I am applying for a full professorship. My PhD thesis took a while. I had to make a lot of empirical tests, and it took me 7 years to analyze all the available data on the Bulgarian financial markets. And my PhD is basically an overview of all the possible algorithms and all the possible models to invest in financial market. Currently, I'm teaching in several courses connected with today's lecture. I'm teaching Introduction to Finance, I'm teaching Financial Management, I'm teaching Financial Modeling, and I'm teaching Financial Markets and Instruments. So this is it for me. Let's start with the course. First lecture is on the Introduction in Finance, and it is all about really the basic terms and what is all these things that are happening around us, what is the importance of finance, and so on and so forth. Let me start with let's call it an introductory test. So I'm going to give you something like 30 seconds to pause this video and to try to answer 3 questions that I'm going to give in a while. And if you happen to know the answers, maybe you know a bit more about finance that you expect. But the typical case is that although they are very easy questions, at least according to Wall Street Journal, most of the people get them wrong systematically. So, first question. Suppose you had $100 in a savings account and the interest rate was 2% per year. After 5 years, how much do you think you would have in the account if you left the money to grow? A, more than $102. B, exactly $102. C, less than $102. Take a moment to think about. Next question is as follows. Imagine that the interest rate on your saving account was 1% per year and inflation was 2% per year. After 1 year, how much would you be able to buy with the money in this account? A, more than today. B, exactly the same. C, less than today. Take a few moments to think about it. Pause the video and then we'll continue after that. Third question. Please tell me whether this statement is true or false. Buying a single company's stock usually provides a safer return than a stock mutual fund. True or false? All right, now that we have had this simple test of 3 questions, we can think about the answers. We can review the answers. Okay, obviously, for question number 1, you would have more than $102 after 5 years because the interest rate would compound the initial $100 5 times. Second of all, if you have 1% interest rates and 2% inflation, I'm sorry to say this, but you would be able to buy less stuff with the same money you have at the end of the year because the inflation is higher than the interest rate. And third of all, buying a single company stock is way much more risky than buying a mutual fund because mutual funds actually invest in several stocks of companies, and this means basically that the risk gets diversified across the investments. So now we are ready to start speaking about the finance. What is finance? Finance is maybe art, maybe science. Basically, it's human activity which deals with the investments, money, banking, credit, assets, and liabilities. Some of these things you probably know. Some of these terms are going to be presented across the course. And we are going to, of course, elaborate more on this according to the next lectures. Okay, so at the same time, finance is referred as a system of public and private interests along which businesses exchange value. And finance basically applies specific values to things that are owned, to services that are used, and to decisions that are made. If we trace finance across history of humanity, we may see that it is an activity that really started with the start of civilization. Although really the science of finance, you may say, has started probably 200-300 years ago. It is actually a French word, and in the 18th century it was adopted by English-speaking communities, and it means the management of money. Since then, it has found a permanent place in the English dictionary. Today, finance is not merely a word. It has emerged into an academic discipline, and it has, of course, a greater significance. There is, of course, a timeline of finance, and one thing that you will see is that the innovation in finance has been accelerating across the time, and there have been major innovations in the last 20 to 30 years. And I'm sure that somewhere along the levels of one academy we'll get to the newest trends of the financial science. Basically, finance, in the general term as a science, has 3 different sub-disciplines. First is the public finance, second is corporate finance, and third is personal finance. And of course, public finance deals with the public management of funds, which means government and state functions to deal with finance. Corporate finance deals with how private sectors, how the companies, how the businesses deal with their financial decisions. And personal finance, of course, deals with how individuals make their decisions. And of course, I'm going to elaborate on each of these in a few minutes. Public finance. Public finance is the study of the income and expenditure of the state. It deals only with the finance of the government Scope of public finance consists in the study of the collection of funds and their allocation between various branches of the state activities, which are regarded as essential duties or function of the state. What does this mean? Basically, this means that public finance is the study of role of the government in the economy. There are basically three questions that public finance deals with. First is the efficient allocation of resources. For example, how do we tax? How do we borrow? How do we direct the government spending? Second question is the distribution of income. For example, how do we spend the public funding so that it has the maximum reward for the society? For example, education or health system, and etc. Another question is stabilization. Yes, it is true that in finance, stabilization is not necessarily important every time, in every occasion, but when we speak about public finance, one thing that you would like to have is stable environments so that you have a predictable way to make your financial decisions. So in a sense, you may see public finance trying to answer challenges such as how to maximize the nation's revenue, how to decrease the nation's expenditures, or where to spend and how much so that it gives the best effect for the society. Do we need to privatize or to nationalize given assets? So let me elaborate on public expenditure. It involves judicious expenditure, which basically means that whatever is legitimized by a law, and I repeat, it involves the judicious expenditure of public funds on the most important and socially and economically relevant activities of the state. Basically, this means that the expenses incurred by the government for its own maintenance and also for the preservation of welfare of society and economy as a whole. Next important aspects are the public revenues. They consist, there are two ways to look at the public revenues. There is the broader way where in the revenues are included all the taxes, all the receipts that the government collects, but at the same time, the broader view includes also the debt that the government takes for funding its activities. The narrow sense, it will only include those sources of income of government which are described as revenue sources, such as taxes, fees, price, fines, penalties, gifts, and so on and so forth. Public debt is basically the loans that the government takes so that it balances the budget and has enough money to spend on expenditure. At the same time, one thing that should be noted right away is that the public debt is something that one has to be careful with because it can amount to quite a lot and it could make a lot of damages to economy. Corporate finance. It basically includes all the necessary activities to running a corporation through overseeing the financial assets. Corporate finance is primarily concerned with maximizing shareholders' value through long-term and short-term financial planning and implementation of various strategies, although there are other views that corporate finance is concerned with also business survival and of course with the taxation and of the company and of course with the future planning, financial planning. And there are three main areas of concern of corporate finance. Basically, they are investment decisions of the company, The other is financing decision. How do we fund our business? And finally, it is the current financial activities which are conducted day to day. As an additional concern of corporate finance, some authors include financial planning. It is just because a financial manager plans the finance of the company, he has to decide how much finance is required, what are the sources of finance, how to finance profitably. Of the three main concerns that I just explained a while ago, I'm going to give some details on them, of course. On the question of raising the finance manager is in charge of raising and collecting the necessary finance for the company. Finance can be collected from many sources, which will be explained a bit further down this level 1. But basically they could be internal and external, they could be through financial markets or through banking and so on and so forth. Second main concern, of course, is the investment in finance. Basically it means now that we already have our activities funded, our business funded, how do we spend so that it is mostly efficient, and how do we spend these money so that we could make our business profitable. This of course includes what assets do we buy, how do we spend on personnel, how do we spend on technology or various intangible assets, and so on and so forth. And finally, I would say the main concern of corporate finance is the day-to-day operations, day-to-day financial operations, which have to be controlled and monitored all the time. One thing you should know here is that 2/3 of the company bankrupt before they have reached their 3rd year of existence, mainly because of poor day-to-day financial operations. Not because of bad business, not because bad personnel or bad assets. It is just because of bad day-to-day financial management. All financial decisions and activities of an individual that could include budgeting, insurance, saving, investment, mortgages, and more are included in personal finance. Financial planning generally involves analyzing your current financial position and predicting short-term and also long-term needs. It also refers to the financial decision which an individual or a family unit is required to make to obtain, budget, save, and spend money and other financial resources over time, taking into account various needs and risk and all future personal events. Main questions of personal finance are typically concerned with something like this: how people can protect themselves against unforeseen personal events, as well as those in the external economy. So what happens when tomorrow I need to react to the new environment that is in the economy? How can family assets best be transferred across generations? One very important function of personal finance deals with how do we build wealth and how do we preserve wealth to the next generations. Another question would be, how does tax policy affect personal financial decisions? What do we do about our how do we do our taxes, first of all, and second of all, how do we optimize our taxes so that we benefit the most of this activity? Another direction of thought of personal finance is what sort of credit do we need, and how does credit affect our financial positions. First area of focus of personal finance is the financial position of the individual. By the way, when we speak about personal finance, we could safely refer it to individual as well as household, because it is basically the same thing, or it is close enough. So when we speak about financial position, a financial position is basically the net worth of the individual or the household. And what is net worth? Well, you can imagine it as being the balance sheet of a person. It includes all the liabilities, all the credits that you have to pay, all the loans that you have taken from friends, for example, all the payments that you have to, down payments that you have to do on, for example, mortgages. At the same time, it includes all the assets of an individual or a household, such as, for example, ownership of a car, or ownership of property, or what sort of bank deposits does this individual have, and so on and so forth. So the financial position, I repeat, basically is the personal balance sheet. At the same time, the financial positions could be referred as a sort of a cash flow statement. So basically it includes all the expected payments, expenses for example, next year, and all the expected incomes. And the analysis that we should do is look at the differences between the expected income and expected expenditure, and plan for the future, plan for the next year. Do we need to increase the incoming cash flow by, let's say, borrowing some money from the banks or some friend, or do we lend some extra cash that we have, or do we invest it in some sort, and so on and so forth. Next area of concern of the personal finance is personal financial security. This means that the personal finance is concerned of how to protect the household from unforeseen risks. Life is a difficult and complex thing, and there are all sorts of unexpected events that happen all the time. Of course, the fortunate ones are the ones that we prefer, but fortunate or non-fortunate, anyway, all unexpected events have some sort of financial effects. They might be, of course, positive financial effects. There might be negative financial effect, which basically means these unexpected life events could make additional expenditures, or could make additional income. And by the way, it might be a negative financial effect coming from a positive life event, and so on and so forth. So basically, personal financial security could be referred as a sort of risk management, and it means that we should be prepared as individuals. We should be prepared for various risks, such as risks connected with the property, with personal matters such as that, or for that matter, with birth, disability, health issues, long-term care, short-term care. And every time we make a personal financial decision, we should make sure to know when are we going to get incomes from this activity that we are starting, when are we going to get to have expenditures, what would be the term of a given investment that we're doing. So for example, first thing that you should ask yourself would be, if I make an investment, when would I need this money from this investment back in my disposal? This is the time aspect of the personal risk management. But there is also the insurance part of personal risk management. You should always have given amount of reserved finance so that you could deal with all the unexpected events in life. Next area of concern of the personal finance is tax planning. Typically, the income tax is the single largest expense in a household, and managing taxes is not a question of if you will pay taxes, obviously, but it is a question of when and how do you pay it. Governments across the world give many incentives in the form of tax deductions and credits, and they can be used to reduce the lifetime of a tax burden. Most modern governments use a progressive tax, although the new trend is to implement proportional taxes. When we have a progressive tax, typically, as somebody's income grows, a higher marginal rate of tax must be paid. When we have a proportional tax, it is also called flat tax rate. It basically means that there is a fixed amount of percentage of your income that you have to pay in form of taxes to the government. There are also various other important taxes, such as property taxes or labor taxes, basically, that are... Okay, това не го кам, че много ще взема да ядосам някой. Okay. There are also other various types of taxes, most notably property taxes or taxes connected with ownership of a car or other assets, which are also of concern here. Next area of concern of personal finance is how do we invest our money? Sometimes it is called investment and accumulation goals. Sometimes you could call it wealth building. But basically, how do we plan our long-term future and how do we accumulate enough money for large purchases of large assets? The major reasons to accumulate assets include purchasing a house or a car, or starting a business, or paying for education of the children, or saving for retirement. This asset allocation will prescribe a percentage allocation to be invested in stocks, bonds, cash, or other alternative investments. The allocation should also take into consideration the personal risk profile of every investor, since risk attitudes vary from person to person, and I'm sure we are going to cover this topic in one of the next levels on the One Academy. Another area of concern of personal finance is estate planning or property planning. Involves planning for a viability of property needed for the household to reside in or to start business in, if this is the case. And what do we do with one's property after that? What do you do? How do you allocate your inheritance among your family, and so on and so forth? The last important area of concern of personal finance is retirement planning. It is the process of understanding how much it costs to live as a retirement, and coming up with a plan to distribute finance and assets to meet any income shortfall for this period. Methods for retirement plan include investing in government-backed pension funds or in private pension funds. Sometimes it may refer to investing in property that would give annual and stable rent. Sometimes it may mean investment in human resources, namely our children. So basically, this concludes our introduction to finance. What we have covered so far, of course, after taking some of the curious tests at the beginning, we explained what finance is about. It is science and at the same time art on dealing with money management, creation and study of money, banking, credit, assets and liabilities. We covered some history of finance. We concluded that there are three major subdisciplines of finance, namely public finance, corporate finance, and personal finance. We explained each one of them in general terms. Public finance, of course, deals with government expenditures and government income. Corporate finance deals with private company finances, and personal finance deals with individual or household finance decisions.